In today's video, we're going to look at one of the markets that we looked at in a breakout session earlier this week, and it is MMM. Now, I did have support at that old low, but that doesn't help you now, right? So what should we be looking at? Well, if this low is any good, then we should hold on a pullback to it, and I'm seeing a little bit of a zigzag pattern here, so I want to set that up, and then we'll see if the zone gets tested. Maybe next week. Well, okay, that one we're through, so we'll get rid of that. We're going to run the projection of this prior high to low swing, project it from the high. Okay, we're also going to take this prior high to low, project it from the high. Those come in close to each other. We're also going to run 100% of this first swing down, project it from the lower high. All right, and now we'll run a retracement of this prior swing. Okay, we have a 618 that overlaps that general area. And then the only other thing we can do is maybe run an extension of this swing and an extension of this swing. So let's try that. So this low to this high. You actually have a 1618 that comes in with that cluster. And then let's try the one last one here. This low to this high. And that one overlaps beautifully. So now what we have is the confluence of 1, 2, 3, 4, 5, 6 price relationships, anywhere between 199.05 to 200.68. So if that area is tested a little bit more closely, you want to go down to a lower time frame chart and see if it triggers a buy entry or not. And then at that point, if I get involved with it, my initial risk will be defined either underneath the low that's made before the buy trigger fires off, or underneath the low end of the zone, which would be underneath the 199.05 area. So I know that some of my guys will be looking at some option strategies against that potential support if we start to see it kick in. Have a great weekend.